Hey, good afternoon. George Cavaligos for HFT Bonds. Well, all overnight again last night. 10 years hit a pretty important level. As an Elliott Wave analyst, we touched the 127.10 area. That was the high from back in July, middle of July. And that's an important level as a resistance level. Now we've pulled back from there. Just kind of a side note, the same level, the same high from back in July in the bonds is up at 136 even. I think last night's high was 134.24. Bonds kind of lagged somewhere over this rally. But we did tag that level in the 10-year. Obviously, you want to be getting out of longs up there. And now we're going to go into some kind of a bigger corrective pattern, I think. A big ABC down. I think we started the corrective trade today when we left these daily doji patterns. Dojis, most of you guys know, the market opens up and closes at the same level. It's an indecisiveness signal. I think the market is anticipating some data coming now next week. Tuesday brings the delayed non-farm payroll data from the beginning of October, the September data, and a bunch of other data next week too. We'll see. It gets tough to trade these corrective patterns now. Corrective patterns, Elliott counts 11 common different corrective patterns, and I think this one's going to be complex because the last one was fairly simple. That's the rule of alternation, where corrective patterns alternate form. So if there's a simple pattern, the next one has to be complex. This one's going to be complex. It's going to be, a triangle, bear flag, double zigzag where you go ABC down, rally, ABC down again. You're just going to have to be patient. If you're a trend trader, I think, you're supposed to be getting out of longs against last night's highs. We should bounce back up towards those highs one time here in between now and middle part of next week. See where that rally stalls, exit your longs, maybe even try a short with a stop, a new high stop if we get close enough to the highs from last night. Like I said, the bonds are still kind of lag behind, so make sure you have a fairly tight stop if you're going to try the short side up here. Just because we put up a doji today and the 10 years met this level doesn't mean that this rally's over. It just says that the probabilities are increasing. So that's where we're at. Have a great weekend. Levels watch. I just ran the 10 years overnight and into Monday morning. Yesterday's lows, or last night's lows at 126.26 and 126.18 plus. The lows from the sort of middle part of yesterday's trade are going to be key. I would love to see a trade down to that 126.18 level. At that point, I think we could probably say the A wave is, finished, depending on the structure of the sell-off. And then you want to probably start a long down there looking for the B wave that could probably retest the highs. That's my favorite trade right now. But again, stay nimble and stay small on these corrective patterns. And if we do take out, last night's highs, we could chug higher, obviously. You want to have your stop above those highs from last night. They're going to be pretty important right now. Have a great weekend. I'll see you guys Monday morning.